Perfect. Yeah, so how are you guys finding the course? Have you guys gotten through it yet? How are you finding the content? You guys hear me at all? Hello?
Yeah, bro.
Yeah, have you had a chance to start the course yet?
Yeah, today this is my first class with you.
Oh, you just started? Okay, I gotcha. Yeah, we'll get going pretty quick here. Like, I don't know how many people are coming. I know this is some people are in different time zones, so that's why we'll put the recording up. For the most part, we'll likely backtest EU just because it's the easiest pair to trade, and I pretty much push all the new traders to trade something easy like EU, maybe GU at the most. I don't really like to venture too far from the US majors. They seem to be a lot easier to trade from everything else. So we'll just we'll just start backtesting now. Anybody that joins is totally cool. So the way I do any backtesting or the way I view any market is I basically look at the 4-hour structure and the 15-minute structure, as you guys seen in the course. Right off the bat here, we could see we had a 4-hour flip zone. So this would be our last supply that put in this low here. So if we actually take a look at this here, this we broke structure one last time here, and we ended up putting in low one more time. And then the next thing we see is we came right back up and we took out this high. So this is actually a 4-hour change of character, and this is actually a 4-hour unconfirmed bullish trend now as well. And the reason I say unconfirmed is we haven't put in a second high quite yet. So now if we just look at this, right off the bat, we have two possibilities here. So possibility one is you have a demand zone here. Possibility two is you have this breaker block zone, which is what I just made the teaching on. And these to me are both valid zones, and I kind of want to see how they react. So I would pull both of these zones, and ultimately what we want to see is some kind of reaction from each one of these zones. Just hold on a sec. Let's see. 15-minute demand. No, oops. Let's try that again. Let's see. 4-hour demand. Perfect. And then we have our breaker block here, which you can pull as many candles as you want. You could pull the range. I would likely just kind of pull this doji and keep the top half of this pulled. So this to me would be the 4-hour zones that I would look at. So this is this would obviously be my preferred zone as it's the original cause of the flip. However, this zone is also valid as we had zero interaction and price just came through. So either one of these zones is valid. They both have a level of inducement. So if we do come down here, this inducement would be valid for this zone as well. If not, and this zone reacts, then we just go ahead and go off of this zone. So then I would likely go down to the 15 minutes. And ideally, we just want to, let's see, I'm just going to move this over here. No, not that. Let's try that again. You guys can all see the screen, right?
Yeah.
Okay. Just making sure. We'll actually just minimize this. So, what we're looking at here now, the way I look at it as you have your levels of inducement down here, and we have our level of inducement down here, if that's the zone that gets triggered. So ideally, we like to see the inducement get taken and then the market head the other direction. That's a perfect scenario for us. This is pretty much, you could even classify this as trend line liquidity if you really want, but these are the levels I really want to see gone. So as always, our analysis does need to come from the higher time frame, and obviously our entries will come from the 1. Oh, no. So let's just move this over. All right, perfect. So right now, we're in no man's land. We don't trade these hours. So we're just going to fast forward to the London Open. And right now, what we're looking for is a 15-minute change of character, because what we had here is 4-hour became bullish when we took this high, unconfirmed, but we are expecting a pullback. And usually when we make one high, we want to see 2 highs. And obviously that's the ideal scenario. Obviously it doesn't always happen for us, but right now my expectation is to continue up as 4-hour is bullish. So that's kind of what we'll roll with for the time being. Under no circumstance would I look for a buy until I see a 15-minute supply fail. We want to see that change of character. We're also not in trading hours right now, so until we get to 7 o'clock London time, I'm not interested in even looking at a trade. So the Frankfurt Open is at 7 o'clock, and around that time would be the earliest that I'd want to get involved if I traded London. We're going to do London and New York just because we have members from different parts of the world. So as you guys can see here, we did tap into that level of inducement here, all our trend line liquidity, and that is something we wanted to see gone. So that part's good. Still a little early for us to get involved. And if you guys have any questions or you want to annotate on the screen, go ahead. I don't mind slowing down, answering whatever I can to help you guys. So that's your change of character right there. For me, this would be our last 15-minute demand zone, or supply zone, I should say. So that's a change of character. Right away, there's 2 ways of pulling the POI here. The first way is you're going to want to pull this whole candle, which is totally fine if you want to do that. I'm not going to talk you out of that. What I personally do is I look at the last set of wicks. So right here, these sell to buy wicks, to me, that's where the actual momentum came from. So if we look at this 15 POI here, there was no interaction of any sort. The buyers just completely pushed price through, which to me says right away we want to be looking at the extremes. When I say you pull these sell to buy wicks, if it comes past it, I don't consider this zone failed till this wick is wiped. So like my demand does go all the way down there. I just don't need to pull it. I just understand that until this low goes, this demand is intact. But I also know that something on the smaller time frame is telling me this is where the BFIs got involved and this is where the momentum stepped in. So this is the zone to me now that I want to see tapped to frame a trade from. Obviously, again, the 4-hour trend is unconfirmed bullish. The 15 just chalked for us. And right now, what I'm looking for myself is I want to see this zone get tapped. If it comes deeper into this zone down here somewhere, that's fine. That's still part of our demand zone, even though we don't have the whole thing pulled. And essentially, all we want to see is some sort of chalk and flip from our zone. And if we don't get that and it just leaves our zone, then I'm going to look at the next flip zone to get in. It's obviously not my preferred method, but sometimes price takes off, and as long as it's low enough on the leg, you can get in the next flip. If price is just gone, and it's far away from your POI, I would likely pull another higher time frame POI and just wait. So like this to me right now, I wouldn't chase this price. This is my initial flip zone. I'm more than happy to just wait. And some days you just the price won't come back. Most days it does. Euro is very, very forgiving, and it's one of the reasons why I push it so hard on a lot of new traders. Is it's a good place to build your confidence. So again, from a 15-minute perspective, this is our inducement level here. We want to see this level wiped. Anytime that happens, that can add confluence to go the other direction from our POI, so it's always good. Obviously, it doesn't always happen, but in a perfect world, that's what I like to see. And something too, I don't know how many of you guys sit on the 1 minute the whole time. It's okay to sit on the 1 minute when you got your POIs marked. Don't sit the whole session on the 1 minute. It can really hypnotize you. And every time a 1 minute flip or a break of structure happens, a lot of traders want to get involved, and it's not the way to do it. In the long run, you'll get wiped if you just sit on the 1 minute the whole time. It's quite dangerous. So at this point, we are in the London kill zone. So 7 to 10 is prime time for London. You can even push it to 11. 11 to 1300 is kind of that dead time for just deader volume as we're waiting for New York volume to come in and the Asia volume's leaving. So these are all just tools you can add to increase the probability a bit for yourself. And ultimately, like we don't need to do anything till our POI gets hit. This is literally how I trade day in, day out. And some weeks there's only 2 or 3 trading days for me. Other weeks, there's 5 or 6 trades in one day. It's different all the time. We're coming into December now too, so you guys can expect the markets to slow down, especially in the second half of December. So again, right here, this is a perfect example where you see a 1 minute break of structure. A lot of people will start wanting to trade this up, but there's really no reason to. We know our 15-minute demand zone's here. Ultimately, we want to see that demand get tapped, and we want to see something happen there. So again, we are reacting to the 4-hour breaker block that we're in. If price does run away from here, we'll likely find a new higher time frame POI and just keep going. But more often than not, our POI will get hit. Like I said, Euro's very, very friendly. It's probably the most beginner-friendly pair. I've tested quite a few pairs, and my hit rate's the highest with EU and GU, which is why I like to trade the pairs. So, for those of you that don't trade seconds, this is a little harder to see, but you actually have a sweep of the highs and the lows here. This to me is a 1 minute chalk. I would show you what it looks like on the seconds, but I don't think it goes back that far, and we'll likely just lose this chart. But this would look something like this on the seconds chart, where you would come down and you have your chalk, which is exactly what we have here. You swept the lows, you swept the highs. Like I would put an order on this wick all day long. It tapped our POI. One of the things I want to make note of is look at the way that body closed. We're mostly all wick. Those of you that stick around the community, you'll notice a lot of, I push wicks really heavy. And the reason being is the only people that have the ability to move price that quick are DFIs. So a lot of times when we see long wicks present, it can be a good indication of a place to get in. But this is a complete 1 minute chalk to myself. And I would throw an order on that all day long. So it does give you your little tap there again. So At this point here, once we take this high, so let's see, as soon as this high goes here, I would be break even on this trade. I like to get my risk off as quick as possible. And the sketchier the move, the quicker I want risk off. So this is a pip and a half stop. You get large R's on this. London's always good for this kind of stuff. New York is hit and miss. So if we look at the long-term target side of things, this is where we could kind of zoom out on the higher time frame. And something we can notice is this here is a weak high. This high is weak because it failed to run this low. So this can be your first target for a TP is this high. Something I want to make note of too to everyone is every time we run a high, we want to take partials. So you run this high, you pay yourself. You run a high up here, you pay yourself. You run a high, you pay yourself. And every time these highs get run, there's large amounts of liquidity there, and we don't know if the market will do this or if the market will go right through. So it's always a good idea to take partials. We never truly know where the market is going to reverse. So if we're going up, any high we run, we want to take partials. If we're going down, any low we run, we want to take partials. So all we're doing here is identifying the weak high, which is also a supply zone on the 15. So that'll be a 15 supply here. Now, alternatively, we have the next supply zone's kind of here. Does anybody have any questions so far? If you guys do, or you have questions, or you want to scribble on the screen, or you even see a trade you want to take, anything you guys want to do, just say something. While we're on the higher time frame too, let's look at the let's look at our layout here. So this is like perfectly stacked trend line liquidity. You have stacked liquidity up here, which are equal highs. So the first thing I would target is likely this. Obviously, the long-term target would be this high, which is our 4-hour high. But under no circumstance would you want to hold full volume and not pay yourself. So like this guy here, if you run that high, you're 12R. So let's say you partial out 60 or 70% and leave the rest on to see if it'll run the 4-hour high. That would be proper management. If you have a hard time holding that long, then take off 80 or 90% here and just leave a little runner on. Or by all means, you could just fully close the trade too, because let's be honest, 12R is a fantastic day. But under no circumstance do you need to be holding full volume. We run a high, we pay ourselves. If we're bearish, we run a low, we pay ourselves. And this is very important. You need to have a plan to pay yourself. Now here, so if we didn't get involved here, you do have another flip zone here.
And I have a question.
Hey, go ahead, buddy.
Say that again. Can I ask you?
Yeah, absolutely.
Kindly turn it 15-minute chart.
15-minute, yeah. 2 seconds.
How can you observe that my TP target or this high is weak? How can you identify this?
Okay, so the reason I said this high here is weak, so the job of this high is to run this low. Soon as this low doesn't get run, now I don't know, like the market can come back and do this, but right now what I see is a supply zone here that failed and demand took control. So right now, because we had a 15-minute change of character, I can ultimately assume that we're going to continue on up with the bullish 4-hour trend. Obviously, it's never guaranteed, but the reason this high is weak is just because it didn't run this low. Now, let's say this happened and this low gets run. This high now becomes strong and I want to find what took out this low, and then whatever took out this low, we'd want the market to come back and find entry on whatever the cause of that failure was, and we'd go down. And this is why I tell people not to try to predict the market. We have a pretty good assumption that it should keep going up because 4 hour is unconfirmed bullish, but there is nothing that's stopping the market from doing this and then going up. And that's where your risk management comes in, right? But that's my first target just for that reason. That's a weak high. It didn't run the low. And any weak point should be your target. And even if they're not weak and you ran a high, you should still pay yourself because it's not guaranteed that you're going to keep going. Myself, I probably wouldn't get involved in this trade here, but this to me is a valid flip zone. Whether or not you get, let's see, so this right here is kind of your reaction point and your point of failure here. If you did want to scale in because you missed that, that would be the next place to do it. It's close enough to the POI. I'd be willing to take this flip zone. The further away we get from this 15-minute POI, the less I want to keep taking flip zones. Basically meaning that trading up here is a little riskier because I don't know if it's going to react here and go down. Whereas down here, I can break even. My risk is off. If this trade breaks even, that's fine. You're giving yourself that travel room before that next supply to take risk off. So if you did miss it, that would be a valid opportunity. And so I don't even know if you would have got tapped into that, to be honest, if you calculate spread. But that's ultimately what I would look for is the next flip zone. You know, you have, depending how gun-ho you are, you have another flip zone here. You have another entry here. I would likely not touch that. But that is a valid trade. It is a flip zone. If you did touch that, I would definitely have risk off before you hit this supply. And that's just being smart, you know. Let's see. So if you just look over here, you had another flip zone. If you really wanted to, this would be a valid POI. You have to be careful with this, though. Look how far you've traveled from your POI. Myself, I would want something on the higher time frame to show. So here you do have a wick. You do have a 15 wick here. That to me is a valid demand zone. It's likely like a 10-minute demand or something. You got to chalk and flip inside that. There may be a trade opportunity. But be realistic with yourself. Can you get risk off and risk off before this supply? If you can, by all means, take the trade. If you can't, don't be executing a trade up here heading into this supply. We expect some sort of reaction from it. I don't expect this supply to hold, but I expect the reaction back. So you're almost better off waiting for this supply to react. Wait for one of your POIs, whether that's this wick or it comes back down here. Wherever this wants to come down, you want to wait for one of these higher time frame POIs. And as long as that's getting hit, that's a higher probability trade. All right, so, but ultimately, like I said, guys, the long-term target is this 4-hour high. Are you going to make it there in one session? Probably not. So you always want to take partials at every high that's run. It's just smart to pay yourself. This zone here is a that we pulled is a probably a 10-minute demand or something. This 15-minute wick. I would probably feel all right about taking a trade off here if it presents itself. And this is kind of the extreme of it. But as far as taking any more orders past this while we're heading to a supply, not a chance. Like at this point, I'd wait for the reaction from the supply. And if you don't get in a trade, that's totally fine. Like there will always be another trade. So same thing again, right? We have this 10-minute POI here, the 15-minute wick. You have your level of inducement here. And ideally, you want to see that get run before you get involved. And for those of you that are wondering, is this a valid order? This here, absolutely, in the sense of it did actually probably looks more like this. And the reason this level becomes valid is you have a reaction point here. And for those of you that have made it through the course, we wanna know what caused the reaction point and the supply to fail. Here you have two places. It's either the extreme or the sell to buy wicks. And something I found in my testing is if these, so this is your first zone here, your next zone here is this extreme. In my testing, I found that if these two zones are touching, you want to go for the extreme. Now, if you have a zone here and you have a zone here that caused this reaction point to fail, then I would put my order on this zone because it'll likely go. But as soon as they're touching, you always want to be on that extreme. Especially with Euro, I found this seems to be true more often than not. And for those of you that are wondering, can you put an order on both? Yeah, you totally can. Like a lot of times if my first zone fails and I still think this is going up, I'm more than happy to put that order back in. So let's say we did get involved here. Where would you guys pay yourself? Annotate on the screen where you guys would take partials. There you go. Perfect. We'd want to take something off as soon as we run the high because nothing's guaranteed. So let's say you got involved in that. You likely want to cover all these wicks. To be honest, if that's only 1.2 pips, I would have probably taken that whole area. Usually a pip and a half's pretty good. If it's like 1.2 pips, 1.1 pips, most of the time I'll give it a pip and a half and I'll just front run the order a bit for spread. Like it's small enough. I don't need a 0.9 pips stop on Euro. It's nice when it works out, but it'll likely just take you out. So with what Brian marked here, again, you would be risk off and pay yourself there. And for those of you that are wondering if you'd enter on this flip zone, I would not. Even though these are flips and a lot of people are like, you could probably enter on this range. I would not, in the sense of you have not broken this supply yet. As far as we're concerned, the supply is still intact. So anytime you're in a supply, like I wait for it to be broken or for the reaction to come back. You want that travel room to break even. So we've taken partials on this. We're risk-free. This is risk-free. At this point, both of these trades have paid you. You know, even if you took whatever 50%, and that was probably what, let's see the R on that here. So that's 4R. Let's say you took 50%, left 50% on. So you took 2R off this trade. That trade owes you nothing at this point. And, you know, if it goes, great. If it doesn't, you just kind of wait for something else to line up. So it looks like we are breaking the 15-minute. Something I want to make note of, if you see this 1 minute candles go through a 15-minute zone, that doesn't mean your 15-minute zone failed. Because what this is on the 15-minute right now is a 15-minute wick. It's not failed till there's a 15-minute body close on the outside. It's very important you make that distinction because you can definitely get lost if you don't. So speaking of that, let's actually just look at the 15-minute. So again, if this is risk off and you paid yourself, where would you guys pay yourself next? Anyone? I would likely pay myself here when these highs are run, as that's liquidity, and there will likely be a pullback. So your first trade that you were in here, you took partials at this high. Let's say you took 60% or 70% or whatever. I believe that was like a 12R. At this point, the day owes you nothing, right? So at 13R, if you took 60% of that, you're probably up 8R on the day. Leave a runner on to run this 4-hour high. If it does, great. If it doesn't, it doesn't matter. That's how I manage. And anytime I enter a trade, I want to be paid. I have a plan of where I'm going to get paid before I enter the trade. I know a lot of people don't. One of the most common questions I get is, where do I pay myself? If you're looking to go higher and you're pro higher time frame trend, you want to pay yourself every time you run the high. Now, if this was counter trend, I would want to pay myself every time we hit a supply zone, because we're not guaranteed that we're breaking it. Whereas if we're pro trend, then chances are these are going to fail. So that's how I manage. I would figure that out before you enter a trade. You definitely want to have a management plan. And as of right now, what we could say too is you have another flip zone again. So you have these wicks. So I'm just going to retract this one. I'd say we kind of tapped into that. I would pull these two wicks as your most relevant supply zone right now. Either one of them is possible to react. This wick here caused this zone to fail when this reaction point got taken out. So this makes this a valid POI. The next wick is responsible for taking this out. So again, a valid POI. I don't know which one's going to react. For those of us that trade London, you would likely just hold your London trades and not even look for another trade. I don't get that option. I trade in New York, so obviously I'd be looking for trades in New York. We call that a 15 demand. And same thing again, pay yourself at the highs, which is like an 11R, and look to run the 4-hour high. But you're always paying yourself at every set of highs. Does that all kind of make sense so far, guys? I know nobody's really said anything or asked a whole lot of questions. Quiet group. All right, well, we're going to roll with yes. I actually haven't checked. Did anybody? Yeah, it does. Perfect. Perfect. So yeah, so we're kind of, again, you're looking for some sort of higher time frame tap. And whether or not you want to get involved in something else, it's totally up to you. I likely will, because like I said, I trade New York, so I wouldn't be in the first two trades anyway. Now, this is a flip zone here. Is that a trade? Probably. Would I take it? Probably not. I'm okay with waiting for one of these zones to get tapped again. There's always got to be a bit of why are we taking the trade? And what you're going to find is a lot of times this stuff is just going to end up becoming trendline liquidity or some sort of inducement for when price does come tap one of these POIs. It's kind of, hold on a sec. It's kind of hard to distinguish these. I'm just going to overlap a bit so we can see that that's two different POIs. Both of these are valid, like I said. And what you're going to find a lot of times too is it'll tap one go up, come back down. And the reason is the market's creating an inducement for the real move. It doesn't always, but for those of you that watched the breaker block video I made, that's kind of how they're used. And I found that anytime you have two POIs this close, the top one will induce the bottom one. Not saying you can't trade off it, just again, manage your risk and don't be a retard. For those of you guys wondering, would I take all of these trades? Absolutely not. These are all going into a supply. So we did run these highs here. Obviously, we would have paid ourselves from the second position. Anytime we run highs, we expect the pullback. And then once the pullback happens, if this is the high, that becomes the new target. If that's run, I'm going to look left and be like, okay, well, this is the next target. And ultimately, there's always, as long as we're going up, there's a high to run, and that's the place to pay yourself. So something we can do here is just move this supply up. I'm going to move it to these wicks for now. Just because as of right now, they're holding. And we do have a supply here that's been mitigated pretty well. This wick mitigated that. This high wick mitigated this. So the likely thing is your real supply that's going to hold is this wick here, as that hasn't been mitigated yet. The supply behind it's been mitigated, so that's likely your next place to react. So it's always good to know where you're going to react. If we look left here, this supply hasn't been mitigated either, so you'll likely get a good reaction from that before it continues through it. Not always, but more often than not. And if you really want to get technical, nothing's mitigated this wick either. So if this fails, I would move this up to this wick. And I'm always looking at possible places to react. And again, you're just looking for the Y. So we'll just continue on here. Like I would be at the charts right now, obviously. Obviously we'd be looking for a New York trade. So we did tap our first POI. So that to me is a bit of a V-shaped reaction. You do get a 1 minute shock here. Bit of a, let's see. The proper zone would probably be this wick. I would likely, depending on the size of this, see how big is that. So let's just measure that quick. Not a big fan of going over 3 pips on euro, so that's still pretty tolerable. This pair just doesn't move enough to take way bigger stops than that. So likely what I would do is just take the 25% entry here, cover your lows. So that's about 2.1 pips. You could even front run it a bit, take a little more, cover for spread. Again, we can definitely shoot for the moon, but any smart trader is going to partial something here. And being that we're higher in the leg, you want to break even as quick as possible. So we'll just continue on here. So that is our top. Whenever you see these wicks here, a big aggressive reaction like that, that's a really good sign. I like to see those. That always makes me happy. Again, DFIs can create wicks, so it's a good sign that, maybe we'll see price head away from the wick. And I would likely be broke even here, just because of where we are being high. So again, partials collected here, right? And we just kind of carry on. We could also check the 15-minute, and so as of right now, we pretty much say that this zone becomes invalid, and we're just playing with the next supply now. So if we're looking at this realistically, if all of this is wiped, you're likely going to see some sort of a pullback, whether it's little or big, and then you'll likely run this high, which makes this high the next target as long as we continue up. So this is our last sort of demand here that gave us the high. So this becomes a relevant point to me now. And we'll call that a 15 demand. And the reason that's relevant to me is I want to see this demand stay intact if price is to continue going the direction it's going. And ultimately, like I said, we want that 4-hour high to go, but you never know from where, and there's nothing to stop this and then go back up. We've all seen that countless amounts of times. So that's why the plan to pay yourself. So this trade's break even. You took partials. It owes you nothing at this point. And as long as we keep going up, we're just going to keep targeting the weak highs. If something changes, you can basically flip the script and roll on with going the other way. So let's see, we'd be out of this trade, so we'd break even on the rest. That's totally fine. Something I want you to make note of, I disrespected the supply we pulled. We wicked below it. So that can mean one of two things. One, you might have a trade down from this supply, or two, it means absolutely nothing and demand's still in control and we're still looking for longs. This to me is kind of your supply zone, a little riskier. Yeah, definitely. Would I put a buy on that? I probably would, because in New York, we don't get that many chances. So myself, I would be re-entered on this. Now, I want to mention something too. This is likely a 30-second supply. Would I enter on this? Yes. Is that the safest entry? Probably not. A safer entry would be waiting for that high to go. But being that we trade New York and sometimes you don't get the opportunity to be safe, I would likely just take that as long as it's small. Now, on the flip side of things, we just 15-minute chalk to go down too. And there's the wick came below. So now I would likely look for a sell as well. And the reason I would look for a sell is we still have a POI below. There is a bit of inducement here now from the chalk below. Whether or not it happens, it's relevant. I can never obviously predict. But this to me is a perfect sell and buy scenario. So we'll go to 15 supply. So again, you're break even pretty quick on this trade, and which is nice because you're heading into a supply. And again, I'd be paying myself at these highs. So we did get in that. We're break even. You still have a demand below that has not been tapped, but it doesn't have to get tapped. So you did get a 1-minute chalk here. He didn't really have much of a reaction. I would likely throw a sell on this. And depending what it does here, so let's see. So we did just disrespect this demand zone. This is totally up to you. I probably wouldn't get in a sell just because we're in a demand now, but this would be a valid sell. I don't know if I love it in the sense of the demand is right there, but seeing how we're back testing, let's try one. In a live market, I would probably just have an order on this one, but we do have a demand that's on top. You can definitely try a sell. And this is obviously broke even. Probably not the safest trade to be in. Like, so you broke even on the buy. I would be break even on this now too. So something to make note of. Earlier I was telling you guys that when you have a bunch of demand zones like this touching together, you create a sort of inducement. And right now, a lot of people are probably shorting the market, thinking the market changed its hands, which is a total possibility, which is why we're in this. But then there's scenario B that we just came to grab this inducement. And what we're actually doing is we're tapping a deeper demand, which actually caused our original flip zone. So let's just delete these because they're no longer relevant as we're tapping into the deeper supply. So from the 15-minute side of things, look where the market came back to. Our initial flip zone. So if this was your reaction point on the 15, and this is your supply, what took out that reaction point? Well, it's pretty safe to say that it's likely this wick here, and we did come back to collect that. This scenario plays out all the time. If you have a POI stacked here and here and here, what the market will likely do is exactly what it did here, where it taps this, goes up, taps deeper, goes up, and then it comes down and goes. And for those of you that got through the course, this is part of the range wipe section where I told you a range will get wiped a few times. Because on the 1 minute, this is a range getting wiped. So now that you have the liquidity, you would likely look for another buy. And on the flip side of things, you would probably pay yourself here some sort of partials because you ran the lows. Whether or not you choose to is completely up to you. I would likely pay myself. So you do have a chalk right there. Let's just delete or move this back. Whoops. Does anybody have any questions at all? I know you guys have been pretty quiet. Let's see. Delete this.
Why did you take the second shot from this short demand zone?
There's a flip.
This
Yeah.
is a perfect demand.
So I wouldn't take that in the live market. Not a chance. I'm in that just to show you that it's a possibility. But same thing here. We took the highs, and then ultimately here you took the lows. That would be enough for me to get involved. Would I get involved here if there was a demand right here in the live market? Probably not. That's not enough time for me to go break even. It's more or less to show you guys. Likely I would just have an order on there, and once price came past these wicks, I would delete this order as it's no longer validated to me. But yeah, no, this likely wouldn't be a short we'd be in.
Is it valid, the first one, till now?
Sorry, say that?
The first demand zone, supply zone is valid for me.
Is this supply here still valid, you're asking?
Yeah,
I wouldn't short off that anymore, no. It was valid in the sense of if we came here and we tapped into it, the idea is price moves away and on break even, I have no more risk. To me, this is a liquidity grab and we tap the flip zone. As of right now, this market is bullish on the 15 and the 4 hour. So under no circumstance would I still have a short on that. No. The only time you want to, like, the idea is, again, to have that travel room. So if we tap, we're gone. You're break even by the time this happens. So if the market did come back, you don't have any risk on the table. But being that we're in a bullish market, I would likely be looking at this as our flip zone. To be completely honest with you guys, our flip was down here because this would be our last sort of supply here. So you would likely be in a buy here, and that would be your true trade right there. So what I mean by that is you've been induced, you hit the original flip zone. This is actually the trade we truly want is off this wick here. Depending how you trade, you might cover that bottom wick. It's probably smart to do so. Depending on the size of it, I probably wouldn't. So that to me would be where I would get in. And one of the things, this is a V-shaped reaction, 100%. Again, big wick. We liquidated, trade away from that sweep. I wasn't zoomed in enough at the time, but this wick here ultimately is the cause of this supply failing. So I would put an order on that. And at this point, we would be, I think we broke even on the last few trades, which is fine. At this point, though, I would have, now that we've been induced, I would likely honestly run one of these highs. Again, probably pay yourself here. You could probably even hold into here as this supply has been mitigated. But it all depends how you manage. Let's see. It's a good idea to pay yourself often though. So I would, well, that's actually not that bad. 2.3 pips. Yeah, we'd probably cover that wick. That's not bad. I thought it was way bigger. Again, you'd be looking for your highs. If you're smart, you'll likely pay yourself at the high. I don't think you need to pay yourself here because this to me mitigated this. So this high should go if this move is true. Should being the key word. And seeing how you do have runners on and you did take partials on a couple of these before they took you out, you would probably hold. If this was your first trade of the day and you hadn't taken any partials, then I would say pay yourself here. Just as long as you have some method of getting paid for the day. So that is a flip zone here too. Pretty close to the supply. I likely wouldn't take it, but this wick could be a valid zone. Oh, maybe not. Oh, you might still be in that. I cover 0.3 below it. Yeah, I might be in that if I took that. But that's always the way I look at it. If I miss my original entry, where's the next flip zone? And at this point, too, you'd obviously be risk off on this. I likely wouldn't have taken a trade. To be honest, I don't even know if I'd be at the charts. This is 8:13 in the morning. I probably wouldn't even be at the charts anymore. I like to finish my day by 8. If I didn't get a trade, I'd stay late. I definitely wouldn't take any more. So we did run this high. Our next target would be, well, you could pay yourself at this supply, or you could just leave a runner on and see if this 4-hour high, is that the 4-hour high? Hold on. So you haven't ran that yet, but you would have partials on whatever trades you're in, whether it's 10, 20, 30%, likely just leave a bit on. It'll likely run that. As far as taking any more trades at this time, I definitely wouldn't. They do say you could take trades right into 1630 because that's the London close. I personally don't. If you guys do, that's totally up to you. I don't recommend it, but there, maybe some sort of a flip there, or something that'll allow you to get involved. I don't know. This is not a good time to trade, so I would like we just stay out of all that. And if it does go, it goes. If it doesn't, we can actually, you know what? Let's go to the 15-minute. And there's your 4-hour high run. That was our target right from the start. So you wouldn't have much on any of these positions, likely, 10, 20, 30%, maybe 40. But for the most part, you should be paying yourself every time you run a high. And I would take at least 50% off, maybe 60. Especially for those of us that trade funded accounts, depending what the news coming up are, you may not want to leave any on, as you will lose your account if it hits TP or your stop loss during a news event. So yeah, we'll probably end this session here, guys. Just before we do, did anybody have any more questions? I didn't actually. Oh, chat's pretty empty. No, nobody's got any questions. If not, that's totally cool. I'll get the recording up online for anybody to review that wants to review it. And we'll be doing these every Sunday. And the goal is to have you guys doing them as well. They're not going to teach you any psychology whatsoever. What they will teach you is POI selection and spotting the moves in the moment. What you're going to find is you could be a hero backtesting, meaning that if you take losses, it doesn't bother you. It's obviously not like that in the real market, but I do encourage backtesting so you can start spotting these flips and chalks. And the main thing, POI zones. If we just do a quick recap of what London and New York both did, you tapped into a 4-hour POI. There's a 15-minute flip zone here. You tapped into it. You have a sort of a supply here, another 15-minute flip zone. Where does the market come back to? The flip zone. So you can see the power of these flip zones, whether they're daily, 4-hour, 1 hour, 15-minute, half hour. More often than not, they're good POIs to trade from. And I would highly recommend spotting these. And one thing you want to look for is a level of inducement. That'll always help. So this zone here, you have inducement. This zone here, you have this wick as inducement, that sort of inducement. Like you have something to tap into. If that inducement's intact, that zone's likely to hold. At least that's the theory. Higher probability anyhow. If nobody's got any questions, guys, I'll cap it here. I'll send an email out later today for you guys to sign up for Wednesday's midweek review and Q&A. What I would recommend is any questions you have or anything, save them, bring your charts to Wednesday, and we can kind of go through them and answer everything. And we can kind of look at the market outlook for Thursday and Friday. That's why I thought midweek might be a good time to review it and just kind of discuss what happened and what we think is going to happen. But yeah, thanks for coming out, guys. I'll get this up on the site in the next hour here. You're very welcome, bro. Any last questions, anybody?
Can you explain that one more time? This how you found that POI?
Where did we get that? Oh, this was, I think this was just a 1 minute range we pulled where we seen this range of stuff, and we said there was a flip zone here which you may or may not want to get involved in. And the reason we got involved in this, Brian, was there was a 15-minute demand here. ultimately, this was just a lower time frame POI. The reason we got involved was this was the extreme where this flip happened, and the main reason is this. Let's see. Where's our 15 here? We were able to pull this wick. I don't know if you can see it with all this mess, but I was pulling this wick as a POI, sort of. As far as this itself, it's not a 15 POI, no. We just said it was a flip zone that you could get in. Would I recommend it? Probably not. Being that we did get this 15-minute wick, you'd maybe try it. Completely up to you. Myself, more often than not, I'll wait for these POIs, the flip zones, to get hit. But yeah, that's definitely not a 15 POI. That is likely a 5 or 6 or 7 minute flip or something. If that kind of makes sense.
Yeah, it makes sense.
Yeah, I just kind of pulled this as a range and said this was a flip zone. And this was our 15-minute wick. And we basically got in on the flip for that reason, that it was something on the 15-minute. In all honesty, would we need to get involved in that? Probably not. Again, we always want these 15 POIs to get hit. But yeah, does anyone else have any questions before we end this? All right, well, that's totally cool. If nobody does, I'll get this up on the website, guys. I'll get the emails out to you for the midweek session. And I'll do a quick market outlook video later too. I'll get that on the website later today. I don't know if it helps too many people because it's basically this could happen or that could happen, but ultimately you're just going to trade what you see. But I'll keep doing them if it does help members. If it doesn't, I'll stop. For the time being, I will. Thanks for coming out, guys. I'll see you on Wednesday and again on next Sunday. And have a good rest of your day, guys.